In today's video, I'm going to show you how I start day trading from scratch, step by step. I'll save you years I spent in the market losing thousands of dollars, and I'll build you a complete trading roadmap. So by the end of this video, you'll walk away with a clear roadmap that will guide you through your complete trading journey from the beginning. So, a bit about myself. My name is Ahmed, the founder of Champs Crypto. I've been a trader and an investor in the crypto market since 2016 with a solid experience as a full-time profitable day trader. So let's not waste any time and jump on the first part of the video, which is the foundation, how the market actually moves. So here's the truth. If you don't understand how the market actually moves and how the price actually does move in the market, everything you learn going forward will be just memorization. You wouldn't have known and understood how to build an actual skill of reading the market. The market is not magic. The market is not predictions. The market isn't, to be honest, even indicators. It's all about buyers and sellers. Buyers against sellers. That's it. Very simple. When buyers are stronger, the market moves up and the prices go up. When sellers are strong, the market goes lower. And the only place where you can actually see this battle visualized is on the chart where the Japanese candlesticks come in. Candlesticks are just a visual story telling you what price did at a specific period of time, who was in control, buyers or sellers. So let me give you a very easy example to understand on how actual traders make money in the market. Let me give you a very stupid and a beginner friendly example. Think about it this way. You buy 100 coins at $1. Your total investment is 100. Say that coin goes to $5. That way you would have turned your investment from $100 into $500, making a profit of $400. Not because you were lucky, but because you understood the timing and the direction of the coin. And let me give you an actual live example of how I made $700 literally today on the 5-minute time frame scalping. As you can see, I basically just wanted to enter on Bitcoin. We saw the low having lots of liquidity of the day. I was just waiting for a sweep. I wanted for every single buyer that literally jumped in too early for them to get stopped. I was waiting for the low of the day to be taken, and then literally us faking out this low and then reclaiming this area. I basically literally just mentioned this area on my channel. We had went live. I covered this area, and as you can see how perfectly it actually went with me understanding the fake out of the market. I was just waiting for this to go lower, fake out everybody that had bought before me, everybody that tried shorted the market, and then reclaiming this area and going higher. As you can see, if we play the tape, you'll see how perfectly we were able to execute this trade. As you can see, we basically had the low of the day taken, we swept the lows, hit the Fibonacci retracement, and then literally made, as you can see here, almost 1%, which made me make $700 by only risking less than $200 in the market. To start trading, you need some tools and websites to help you. The first one is TradingView, the place where you will be doing all the charting and the planning for the setups. I'll leave the link for it in the description. Just sign up, it's very easy. And the second thing is actually you need an exchange that you'll be doing an actual trading in the market on it. As you can see, I'm using weeks on it right now to make literal profits in the market, and as you can see, I'm literally using right now to make actual money in the market by trading Bitcoin on a daily basis. And the reason why I like weeks is because it's actually tailor-made for us day traders. It allows me the functionality, as you can see, to literally have longs as I do right now, which is in at around $450 profits, as you can see, and simultaneously even hold shorts simultaneously. As you can see, I've made this short, took this short a month ago. I still have it open, and the function of this website allows me to have multiple trades open on Bitcoin or other coins with them being separated. So I can literally open longs, shorts, multiple of them. As you can see, I literally have opposing trades on the different direction of the market. That way I can literally hedge my longs, hedge my shorts, and have me profiting off of the market movements on both sides on the exchange, as you can see. And weeks is best on this because it has lower fees. I like how I can literally open the trades again and again, and also how precise it is for supporting day traders. And now once we are done with this, let me exactly and explicitly tell you how you can start actually doing the charting, and let me break down TradingView for you. So here's the outlook and the overview on TradingView. Once I open the website, I'll go to tradingview.com, and then I'll open and make a very easy sign up process. Once I'm here in my account, as you can see, I basically have on the side what's called a watch list. Basically me being interested in a multiple amount of coins, indices, and also stocks. As you can see, I literally have them in my watch list, being able to look and actually read them. And also inside my watch list, I can literally add it. By the way, guys, if you go on the top right corner, you can see how I can add a symbol on TradingView. As you can see, let's say I want to add Bitcoin. Now Bitcoin trades in pairs, so think about it this way. I want to buy Bitcoin, then obviously I'll be either buying it with multiple different coins, maybe USDC, USDT, maybe even USD, which is actual dollars. So that way you have to think what the pair you are wanting to trade is. As I've mentioned, I trade on weeks. All of the important big exchanges actually use the Bitcoin against the USDT, which is the coin that literally is tokenized against the dollar, as you can see. So we'll type in BTC, which is the ticker symbol for Bitcoin, against USDT. So I'll do USDT, and that way I'll have the pair which is traded against the USDT, as you can see. So all right, Bitcoin, then USDT, and that would tell me what kind of exchanges TradingView offers. As I told you, here we're only doing the charting, so you can literally like pick a different exchange to the one you're using. It doesn't matter as long as you're doing the charting and then going on an exchange and then doing the execution. So this website is not for the execution, it's only for the planning and the TA itself, or the technical analysis itself. So I'll go with the random exchange. As you can see, all of these exchanges on the right corner, as you can see, we got Qcoin, Maxi, Coinbase. So we'll click on a different one. Once you pick your coin and the pair, and then you click on the button which is add to watch list, the sign button or the summation button, that would actually add it to the watch list. As you can see, I've got already lots and lots of stocks and also crypto, as we're going to be trading crypto. I've got Bitcoin with multiple pairs on multiple exchanges, as you can see. Let's go and jump into the chart. Let me give you a quick look at how the chart actually looks like once you actually select here. As you can see, let me go on Bitcoin. Now we'll have to click on it and then go full chart. Now as you can see here, now obviously the candles don't look like the norm because I've changed how the color looks like. But as you can see here, we got Bitcoin, right? That's Bitcoin's price. But if you guys remember from the beginning of the video, we've spoken about a thing called candlesticks, or to be precise, the Japanese candlesticks. As you can see, let me go on the daily time frame and show you guys how the candles actually represent or visualize a story about the price within a certain period. As you can see, so on a daily time frame, this candle, basically every single candle represents individual period of a specific time frame. So right now on the top left corner, I have here the daily time frame with the letter D symbolizing a 1 day. All right, that way these candles are basically just the candles per day, as you can see. So as you can see here, every single color, whether it is gray, which stands for red, or green, as you can see, that way it just tells me that this is a day, that's yesterday, that's the day before it. As you can see, every single day is cut with a different candle. And let me also explain how candles actually work. If you look at it, if I zoom in right now on the current day, which is this candle, as you can see, now if the candle is red, or in my case now, because I've got different colors here, you can play around with them, but I'll just sticking with the regular default red and green for a beginner. So if the candle is red or gray in my case here, then that would tell you that this specific candle had opened and then closed lower than the open. So if the candle is red, then the body, which is actually this filled box or rectangle, as you can see, the body has began at the top. So in our case today on Bitcoin, we have opened at 88,554, as you can see, and right now we are trading below the open. So as you can see, if we have opened and then made a red color or a gray, in my case, candle, that means we have opened here and now we are going to probably be closing here. And whenever we see a wick, which is the little lines coming off of the bottom and the top of the candle, that would tell you that the price had gone through these areas. So I can tell, or I can say that with this candle, basically I can understand a story on the daily time frame. I can have a reading that yesterday, for example, as you can see with this larger wick that we have here, I can basically tell that yesterday we opened at 8863 538 as you can see, and close very close to it because it's red, so the open will be the higher one, the higher end of the body. The lower end will be us closing at 88,537. And I can tell that at one point of the day we were literally printing a very large upside move. So we literally went yesterday, we went from the open of the day all the way higher to 90.550. But the reason why it is a wick, not an actual body, is because we have actually retraced afterwards and then went lower. And I can even tell that on the other side of the candle we also went lower. So we had gone up by a lot, gone down a bit, but at the end we closed actually very close to the open of the candle. As you can see guys, just to use an example of a white candle, or in your guys' case just a green regular candle. Now as you can see, whenever it's green we can tell that the candle open was at the bottom of the body and the close was at the top, and we got wicks that literally tells us a story of how the price literally was going higher at some point, but then we retraced. And also on the lower side we had gone a bit at the beginning of the day before going higher. And if you guys have paid attention, I've mentioned a term called time frame. What exactly a time frame, and how can literally a chart look differently depending on what kind of time frame we're looking at? Basically on the top left corner, as you can see here, we got daily, which is the day time frame or the daily time frame, as I told you, which basically just makes the candles, every single individual candle, represent a single day. Now if I want to represent the candles or have the candles represent 1 hour, I can go on the time frames here, as you can see, and then click. As you can see, I click on the 1 hourly. That way the chart would still tell me the same thing. It will still tell me the same price difference within a single period, so maybe a day. But now the day is broken down into 24 candles, obviously each candle being an hour, as you can see. So you remember how we had the big large move to the upside yesterday? Now with that 1 hourly time frame we can clearly see it being visualized by multiple amount of candles, as you can see. So that way this part, if you guys remember, this move up was a wick in one candle, but if we go lower we can have a deeper look and a deeper understanding of what happened exactly. How time frames can literally tell you a different story based on you looking on a lower time frame or a higher time frame. Sometimes people get super bearish, super scared for example, because they are watching on the 5-minute time frame. 5-minute time frame means just that 5 minutes, every single candle is just closing after 5 minutes, a new one opens. So if I go to the 5-minute time frame, look how crazy and also scary this looks. But remember that if I go on a daily time frame, all of them will be just part of one little candle, as you can see. So the whole story can be literally told in a different and a variety of ways. Now let's talk about technical analysis, guys. Now there are many schools for technical analysis, and most of them, to be honest, literally overcomplicate things. So however, I did the work for you and I'll give you 4 important concepts. If you understand them, you'll hopefully become profitable in trading one day, which are uptrend, Fibonacci retracement, market liquidity, and market structure. So let's jump into trading math, the part that actually makes you money. Let me put it very, very clearly. Trading and TA is not the hard part, to be honest. What matters is actually risk management. All we can control as a trader is how much we will be actually risking, how much we can lose per trade, and also how much we can win per trade too. So that's basically it. Let's say you wanna always like risk $100 per trade, which would equal to 1 unit of risk per trade, and that would basically visualize on the chart, as you can see. So if I wanna enter a trade and I want to maximize or minimize my losses, I would put my long if I want to enter a long here. That way I have to understand why or how much I'm going to risk and the risk to reward ratio. So we've said that as a trader, I'm going to set up a risk management plan where I always not only when I always set a stop loss as an important thing and non-negotiable in trading, you have to always set a stop loss, but you also have to come up with your 1 unit risk per trade on every single trade, and that way it will be a default number for you. So if I have, let's say, $1,000 or $2,000, I want to only risk $100 $100. Now, if you wanna, or some traders or some beginners hear this and say or think that I'm saying that you have to enter with $100 per trade, but no, I'm talking about how much if your stop loss gets hit, how much is your 1R or one risk unit per trade. So on our chart here, say I'm going to enter right now at the current price and I set my stop loss at $100. So like for example, I'll enter, and if I get to this point, I'm going to be losing 100. That will be the 1R per trade. I'm not here as a gambler. I know that if my stop loss gets hit, I will always lose a certain amount. The reason why beginners usually lose all the money on trading and trying to become a profitable trader is because they don't understand that trading is a game of probability. We're not here trying to learn TA to predict where the market is going. I cannot tell you if the market is going to 100k or $0 for that matter on Bitcoin, but I can tell you for sure that if I enter a trade, I know how much precisely the market can take from me. They cannot take more than 1 hour from my risk management plan. So in the example on the chart, as I told you, so we'll say we have entered here and we have our 1 hour being set at a loss or a potential loss of $100, and my take profit, I want it to be, let's say, at the top of these candles. So as an example, I will have here, if you focus on the chart, this tool would tell me that if I manage to get my TP, my take profit, I will be making 4.58, so 4.58x the amount of the R that I'm risking. So that is actually a 4.5 R trade, as you can see, meaning that I'll either lose my set $100 or make 4.5x, which is like $450 in profit per trades. And that's how most traders fail to understand that trading is actually about the long term. So let me make it very clear. You have to look for trades that will actually offer you an unfair advantage in the market. That way we're not like putting ourselves in a situation where we want to make more money and actually win more trades. I'm not here looking for the success rate per 10 trades. I'm merely looking that even if I get 5 out of 10 trades correct, which is 50% success rate, with me looking for trades that would put me at an unfair advantage against everybody else in the market. Every single time I open a trade with my R profit, potential R is more, twice or 3 times, or even 4 times my potential loss. That way I'm almost guaranteeing that even with a 50% success rate, I'll be able to make money. As an example, so let's say I have a rule that I will never enter a trade without the market actually giving me a potential 3R. So every single trade supposedly would look like this. I'll always either risk $100 or make $300, which is 3 times my R, so 3R trades. That way, with our previous success rate of 50%, so let's just say I trade or take 10 trades and I lose 5 and win 5. If a beginner hears this and say, oh, you're a bad trader, you don't understand how the market goes, you won't be making money. However, mathematically, if I win 5 and I lose 5, just because the losing 5s only lose me $500, but the 5 winners actually make me $300, 3 times the amount of loss. That way it's 300 times 5, which means a profit of 1500, and the loss is 100 times 5, resulting in 500 loss. So I had made, even if the success rate is 50%, I made 1500 and I lost $500, resulting in $1000 in profit. So the goal here in trading is only to look for this unfair advantage against everybody else in the market. I'm not here trying to actually look cool by literally taking trades every single day, even whenever I go live on my channel. I'm not trying to actually get every trade right. I'm merely trying to minimize my loss. I know where I'm going to be wrong. I know how much I'm going to be exactly losing when I'm wrong. And I also know that if this gets hit, even at a 50-50 chance, I'm going to be making an unproportional, unfair amount of money when I get the trade right. Now, after everything we have spoken about the market, technical analysis, and also risk management, a question has to come to your mind, which is like, the theory is good and all, but how does this actually realize in the market? Let me actually give you a live example of an actual trade that I actually took. I'll show you why I entered, how I entered, and also how I managed my trade. So as you can see here in the market and on the chart, as you can see, I'll be taking you guys through my thought process of how I actually made $1,700 in the market by trading a very, very basic concept of mine, which I actually teach. And I also do take these kind of trades live, guys, with you every single day on the live streams on my channel. So basically, Bitcoin was looking like this. We had Bitcoin actually reclaim the value area low, which is a tool that called the volume profile. And we also used the anchored VWAP, which is also a tool that I use. As you can see here, I put it from the beginning of an uptrend. So I saw that Bitcoin was uptrending. We've spoken about how important it is to understand the trend of the market. I saw that on the 30-minute time frame, on the 30-minute and the local 15-minute time frame, as you can see, we saw the market actually flip from bearish. We had went down into bullish by making actually higher highs and higher lows. As you can see clearly, the market has shifted into bullishness on the lower time frame. This was only a scalp meaning a little local small quick win of a trade, as you can see. So I saw Bitcoin actually reclaim also 87k. Now 87k is a very, very important key level. Why? Because I told you guys I look at real market data, and using the volume profile, we had seen 87k being the highest volume traded area for the past month, and I saw, as I told you, Bitcoin breaking it here once we had reclaimed 87k. So I wasn't looking to trade a breakout. I'm not the kind of person that actually hits a certain resistance, look for a breakout and then enter long. I wouldn't be doing that, but I understood that with the market being in my favor, with me looking for a long, for a purchase, for a buy, with the market actually going higher, I was just basically waiting for a retracement lower. I was waiting for this level to be retested. So I was waiting for 87k, that being the highest volume area for the past month, and also for this little anchored view up. So I usually have multiple reasons. Like I look for the volume profile area, I look for the anchored view up, Fibonacci, market trend, and then I'll try and see a specific level. Like as a trader, I'm not here to actually over trade. I'll only look for stuff that would add together as a confluence. I look for 2, 3, or even sometimes 4 or 5 reasons that will all show me a specific area. Now we have 87k as an example. I was waiting for the market to go lower, and then I was planning to open a long. I literally gave it also for free on my free Telegram channel, guys, as you can see. So that was the plan, as you can see us entering here and then targeting the high, which was here I think 2 or 3 days ago. As you can see, that was the plan. Look for a drop with the trend and then ride the wave all the way higher. And as you can see, that was how it was taken. I literally just saw the hit, right? I never set limit orders. I'll show you how I entered the trade on weeks, but I was just waiting with an alert on. I had set an alert on TradingView. If you want to set an alert, just click on this little summation plus addition button on the right corner, and then you can hit and choose what kind of time do you want to be alerted at. All right, so I was waiting for 87. All right, once we went down to 87k, look at how the market actually reacted off of this area. As you can see, I was waiting for this perfect entry. I saw how the market was put. I understood that I'm risking $100 to make $400. 4 are my risk, as you can see, and then that was how it was perfectly playing out. As you can see, obviously once we got the hit of the alert, obviously TradingView was only for planning the trade. So I went to weeks, as you can see, went over in weeks, and then on weeks I told you I don't set limit orders. So the way I did it is actually go into Bitcoin, go into futures, go into Bitcoin, and then actually go into the market order option, and then immediately setting the amount of money I want to add or enter. And I literally went back, saw the amount of money I wanted to risk, and understood if I get hit my stop loss, how much money do I have to lose. All right, so I saw that my stop loss is 1%, and that way I understood that I have to enter with $2,000. I put $2,000 in the market and then hit the open long green button, and as you can see, that was the result of the trade, perfectly going on our way, and actually perfectly also hunting the high of the day, ended up being 98 or 90.5k. As you can see, if I quickly literally make the quick, as you can see, if the trade went was or took us a while, to be honest, I literally took 2 trades here. I entered again at 87. I understood the market was probably going to be taking the high, and as you can see here, perfectly after almost 2 or 3 days, sometimes my trades even stay open for like days on end, as you can see. So I literally was waiting, reading the market, and also just happily in profits. So I wasn't trying to like leave early. Most traders literally like fail to make it in the market because they try to have a higher success rate rather than focusing on on the amount of profit. So as you can see, perfect hit of the trade, and then that was the trade for me. I left with $1,700 on the trade. And that way, guys, I want to also end it off with an important thing, that rather than focusing on while you're at your journey and actually learning TA and also how to trade and become a profitable trader, I want you to promise me this: always set your stop loss. Never ever enter trade without a stop loss. And also do keep in mind that we're not looking for a high success rate in trades. Most traders, unfortunately, focus too much on trying to act cool by literally having a 9 out of 10 success rate. I'm not trying to do that. I'm not closing my trades very quickly. I'll either get my full TP or have a minimal loss on the trade. You have to understand this idea, because trading is a game of probability. You have to win big and lose small. If you fail to do so, you'll end up with a higher success rate, maybe more than I am, but you'll fail at trading, because every single loser is a very huge loser. Every single trader new to the market would literally use their money as a gambling money, right? They either win big or lose big. But in the trading game, you have to actually pick your battles, always minimize your loss. Understand that it's not about actually winning a lot, it's actually about winning big. And if you have found this video quite helpful, make sure to subscribe, and also keep in mind, guys, that I do actually go live every single day, Monday to Friday, on my channel, literally breaking down the market and also live trading with you guys. And also, if you want to actually use my affiliate link for weeks, you'll find it down first, link in description. That would give you $50 if you deposit 100. No KYC required. Thank you for watching.